Back, folks. We are continuing to monitor the retaliatory U.S. airstrikes in Syria. That's what the reports have. And those airstrikes have, in fact, begun. We're going to report several times over the course of the show with Grady Trimble and perhaps others helping us out. But let's go back to the earlier business. Let's talk about today's job report and my riff and the likelihood the Fed may not cut interest rates again in my lifetime. We've got the great John Carney, Breitbart economics and finance editor and author or co-author of the Breitbart Business Digest. We have my old and dear friend, Douglas Holtz-Eakin. Doug Eakin is a former president, a former director of the CBO, and now president of American Action Forum. And Mr. Wonderful, Kevin O'Leary, chairman of O'Leary Ventures, author of Cold Hard Truth on Business, Money, and Life, and et cetera, et cetera. John, you're the closest. I'm going to give you the first whack at this. Let's beat the street by twice.
Yeah.
Let me just ask you this. I know, I'm not going to name names. I know a lot of people who are trying to shoot holes in this and shoot it down.
Right.
They are, shall we say, of the conservative persuasion. They are people who, I will say, do not wish Joe Biden to be reelected. I don't think they wish him harm.
Right.
They just don't want him reelected. Okay. But I looked at these numbers up and down, and I made some calls. And as far as these numbers go, which are always subject to revision, they look pretty real to me. What's your take?
Yes, they're very real. If I take out all of the government jobs, just 36,000.
Yeah.
If I take out all the government adjacent jobs, so the social assistance, I come down to just 217,000 jobs, Larry. That's a really good jobs report, even if you take out all of the, maybe not cyclically related jobs.
My heart yearns for honest reporting at times like that. And I'll be the first guy to say, every forecasting model was wrong about last year. Federal Reserve, CBO, Survey of Professional Forecasters, Kudlow, I was wrong. There was no major slowdown or recession. The economy is... Actually, this jobs number looks like it's picking up steam.
It is picking up steam, and what I think this means is not only is the March cut off the table, the May cut is off the table, maybe the June cut. If the Fed doesn't cut by July, I don't think they cut at all until after the election. The November meeting starts the day after Election Day. They can cut then. They pushed it back a day. It's usually Tuesday, Wednesday. It's Wednesday, Thursday in November.
They may not have a reason to cut.
I don't think they're going to cut at all.
I want to go to my old friend, dear friend, Dougie Holtz-Eakin, who was a distinguished CBO director and an honest one, and has run an American Action, and he's been a presidential advisor, and he knows a whole lot about this stuff. First of all, Douglas, great to see you. Second of all, what do you make of these numbers? I mean, my take is, I don't care what's your political persuasion, sometimes the numbers are really the numbers.
Yeah, the numbers are the numbers, and I was as surprised as anybody by these numbers. I think the really important number is not the one in this report, but it's the one you mentioned. It's the productivity growth.
Yeah.
The productivity growth in 2023, second half especially, has come out of nowhere, and productivity growth gives you a great luxury. It allows you to have a Fed putting on a lot of restraint on demand and still have output grow without giving up the disinflation. So everything broke the way of growth and disinflation in 2023. My caution is things don't usually break your way all the time. I mean, there's going to be some bad news in the next couple of months, and we should be prepared for that. And I think that's why the Fed's extremely cautious. They have an economy that could very well have some inflationary pressures come back, and they don't want to ease off too quickly.
Well, I agree with that point. And, productivity, Doug, I mean, you're an expert on a lot of stuff, but you also follow the regulatory scene. I mean, productivity, despite regulations, maybe it's AI, quantum computing, I'm not sure. Kevin Hassett thinks it has something to do with AI, and we all know that he's a terribly smart guy. But the point I'm making to you is the wage gains that are showing up in recent numbers, to an extent, Doug, are being earned by better productivity.
Oh, there's no question about it. Another guy with whom we don't always agree, Krugman, has said famously, in the long run, productivity isn't everything, but it's almost everything. Yeah. And so, that's actually the truth. Great productivity growth forgives a lot of sins. So that's what we got in 2023. Here's the last thing, Larry.
Yeah.
It's fueled the household spending, but the thing I'm worried about, business fixed investment, essentially flat in the second half of 2023. Yes. That can't persist. If that doesn't recover, we don't get the continued strength. The household sector comes down to earth.
Yeah, well, the risk is there's too much demand chasing too few goods. because the business sector has been dormant. You're exactly right. Mr. Wonderful, Kevin O'Leary, I don't know. Why should the Fed cut interest rates? And it's interesting to me today, Kevin, the bond market sold off. The 10-year was up, whatever, 10 or 12 bips. I think it closed around 410, 412. Okay. But the stock market continues to rise. So, Kevin, how do you see it?
Two things, Larry. Number one, why is this happening? And I'm speculating that it's the digitization of the American economy that occurred during the pandemic. Margin all across the board in S&P 500 companies and small business have improved about 2.5% because they've cut out the middlemen in distribution through direct-to-consumer models or direct B2B models. You see that everywhere, whether you're looking at Nike or a business doing $500 million in sales anywhere in America. Number two, on the Fed issue, this puts a nail in the coffin of anybody thinking they're going to cut rates in May. You got a 75% productivity there, or people betting that they'll cut rates. In fact, the market thinks there's 3 cuts, 25 bips each coming right after the March, which is a 0 probability of a cut. I don't see it. I think the problem is, and you said it's not political, these numbers. It is going to be political. You're going to see the incumbent. The incumbent wants to talk about the economy, wants to talk about jobs, but never, ever do they want to be in a rising rate environment. They want the Fed to cut rates. So the pressure politically on the Fed cutting is going to be very high, particularly as you roll in to Q3, when it's magic to have a rate cut right before you're in the ballot booth. That's classic. It doesn't matter who's in the White House. It really doesn't matter. Well, I think that's going to be an issue.
Of course it's an issue, but my point was a simpler point, actually. And look, I've been doing this stuff, on TV, radio, government, Wall Street for a long time. 1 month doesn't make a political campaign. People get way too excited about it. And as Doug Holtz-Eakin said, you got a whole year to go, and it's we don't know whether this is sustainable. We don't know whether inflation is going to snap back again, which it might. In fact, John Carney, you've written about the possibility. I mean, Jay Powell does worry that it would be like the 70s, that the inflation rate snaps back again.
That's right. I think there's a very good chance that we've gotten all of the goods disinflation is pretty much washed out of the economy. Everything you were going to get from maybe increasing worker participation washed out of the economy. All we have left really is unless we get more productivity, we will get more inflation. So if we keep growing productivity, which, by the way, nobody knows why it's happening, as we were just exploring.
No, never.
And we don't know whether it can continue. So that's the big risk. That's what Jay Powell's afraid of. They don't want to raise. They don't want to cut and then have to come back and raise. So they are going to hold out. Right. I think Kevin O'Leary is absolutely right. No cut in May. No cut in June.
Not in my lifetime.
And they're not going to
cut again in my lifetime.
We may actually, but seriously, rates may be permanently higher. That's one of the things we may have to get used to.
This is like the 90s. It could be like the 90s. But I'll tell you what's not like the 90s. Doug Holtz-Eakin, the 90s, at least in the second term of Bill Clinton, with Newt Gingrich and the Republicans in the House, you and I are both around for all this stuff, we went into surplus. So I just want to raise this point. As a former director
What's that, Larry? What's a surplus?
Yeah, I know, a surplus. You're a former CBO director. You're an honest CBO director. Doug, we are running $2 trillion deficits as far as the eye can see. We are running deficits that are roughly 8% of GDP as far as the eye can see in a peacetime economy with a 3.7% unemployment rate. I don't know how you get that. Whether you're left, right, or how do you get that or sustain that?
You don't sustain it. It's not sustainable, Larry. Something's got to give. The other thing to point out is, it's gotten worse while we're at full employment. That's completely irresponsible. I mean, you just do not expand the deficit at full employment. We've done that. And this is the biggest headwind to better trend growth. When you borrow a ton of money, you're competing with the private sector. Everyone knows that. But we're borrowing it to subsidize consumption, which is fundamentally anti-growth. So the structure of the budget is wrong, the financing of the budget is wrong, and we have a growth problem in the United States. Yeah, we just had a great fourth quarter, but in the 21st century, we're growing a percentage point slower per capita than we did in the 20th century, and that costs you a lot of money.
That's right.
It's cost everybody in the United States $20,000 a year so far, and it's getting bigger.
Last 20 seconds, Kevin O'Leary, you're an ace. What's your favorite investment? Favorite investment, 20 seconds.
It's stay long equities, USD
Yeah,
right now.
yeah.
We have an amazing economy. Just one thing, Larry, that bill, I just read it, that they're trying to pass and ramp through on its way to the Senate. Bad news for small business in there.
Yeah.
They're going to have the IRS auditing small business for a decade. They got to change that.
They got to change that. Well, you know what? They got to change a lot of things. And all I'll say to that one is working on it. John Carney, Breitbart, thank you. Kevin O'Leary, as always, Mr. Wonderful. And Dougie Holtz-Eakin, great to see you.